All right, y'all, back to work. Boy, break time is over. Hope you guys enjoyed the weekend. I missed you guys last week, by the way. Boy, what happened this afternoon? Markets gapped up on Sunday night. Got some good news about tariffs. Markets love that. But we kept going higher and higher and higher all day today. At this point, I'm sure everyone's trying to buy a pullback, right? And everyone's trying to buy the dip right now. But I'll tell you, if you have any experience in trading, you know it's much easier said than done to pick that perfect pullback. So in these situations, when I see a big move higher, there are three types of pullbacks I always look for. They're all very simple, but I'll tell you though, the mindset. There's one characteristic of the perfect pullback we look for the following day. I'm going to talk about that one characteristic so you know which pullback is that perfect pullback. You can time better entries, make a lot more money tomorrow as well. So charts are ready. Enough of the intro. The whole game plan is all set to go. We'll talk entries and exits. Let's dive right in and make some money together on Tuesday morning. Charts look fantastic right now. S&P and SPY is already. NASDAQ, triple Qs are already. I have four, I know a lot of clues right now, four important clues on these charts tonight that are telling us where I think the winning trades are waiting for tomorrow. One of those four clues is right here on these hourly, these 60-minute time frames right now. You can see right away the market was range bound when I was off last week. Of course, what do ranges do? Ranges love to rotate, and boy, what a strong breakout rotation we're seeing here on the S&P. Same thing on the NASDAQ. We've now broken through pendulum swings. We now see some separation off the moving average, that 21 EMA. This tells me the buyers have full control of the momentum on the higher time frame. So one out of four very important clues for tomorrow is the bulls are back in control, at least for now. That may not last all week this week, but for now, right now, the buyers are in full control of momentum. Now, I like to use this higher time frame as an overall directional filter. I have three, what are probably just as important clues on some tick charts. Help us time the entries on those tick charts. Before we talk entries though for tomorrow and talk about those three more important clues and picking that perfect pullback, let's talk schedule for tomorrow. There's two things on my radar tomorrow morning. They're both at 10 o'clock Eastern time. That consumer confidence number, I would think, is the more important number, specifically the inflation expectations tomorrow morning. So be aware of that, 10 o'clock Eastern time, and we get some more big news coming later on in the week. Durable goods, GDP, and that personal income number on Friday. Oh my goodness, we have end of the week, end of the month, end of the quarter, and PCE on Friday. We have a busy week ahead of us. Let's get back to our charts though, because we're getting ready for Tuesday. Let's now drill down to some tick charts though. We're not going to time entries off a time chart, certainly not going to be off an hourly chart. Over on the tick charts right now, I see three really important clues. One big clue, which might be the most important clue overall, is this big move going higher with that gap down there. Now, why is a big move higher a really important clue? Because I don't want to buy high. I want to buy low. I want to see a relatively big pullback to allow me to buy nice and low. I want to buy in an area where I can risk small to earn large. And what do we always say in our trade room? Whenever I want to buy low like this, the best ones are almost scary how sharp they are. But make no mistake, that scary pullback is just price pulling back, trying to give us a chance to risk small, to earn large, and buy at a lower price. And of course, the biggest pullback, to be back to fill that gap down there at 57.20 down below. A great spot to pick the perfect pullback is another clue. You can see price popped up and begins to grind going higher. Anytime we see one of these, we call these pop and grind moves. Anytime we see a pop and grind move like that, we draw a trend line off the highs. We bring that down around the recent lows. I'll tell you, if you want to buy a nice deep pullback, want to find a scary pullback to buy low right now, that channel seems to be a great spot to look for it. And then the final clue, third clue here on the tick charts, fourth clue overall, one of my favorite clues in tonight's video is this trading range. Now, why would that range be an important clue? Because ranges They act like magnets and they love to rotate with symmetry. The amount below, the amount above, the amount above, the amount below. So I would love, on that nice, scary, deep pullback, I would love to buy a bear trap down here. Now, when I say bear trap, think about price pulling back to the 21 EMA. Let the bears try twice. And remember, sellers want to sell high, so you always want to see a higher high, one try, two try. Then, once I have those bears trapped in, now I can use their stops. Now, think about this. If you're caught short, if you get fooled by that scary pullback, if you're caught short on that and you get stopped out, what happens? You buy your way out of that position. Now, in a lot of cases, the best place to take your final target is back to retest the high. But now we're in a range environment. So now the amount below the range, now we can project that amount back above the range and leave that runner using what we call a pendulum swing. Now, this is where it gets fun because here we can start adding to our winners. As we go higher, look for price to separate away from that moving average and start to add to your position. Shallow pullback, like over here, right? Shallow pullback, shallow pullback. See, like on the left there, those shallow pullbacks, they don't pull back to the moving average. If I see something like that over here, that's my clue now. Higher high in price, I can add to my winner. In our trade room, we call these bear traps and add-ons, right? Bear traps and add-ons. Again, it's a big move going higher. Give me that scary, that nice, deep, scary pullback. The scarier, the better. Then as we start rotating higher here, remember, ranges love to rotate. The amount below the range, the amount above the range, it wants to rotate with symmetry. As it's rotating, don't just kick your feet on the desk. Add to that winning trade, that separation away from the moving average, higher high in price. I teach this in our free video classes. Nice strong green candle closing back above that 21 EMA, a 1-to-1 first target, get rid of the risk and leave that runner. Now, one variation of this, sometimes we don't get the bear trap down here. In fact, a lot of times we don't. A lot of times we'll get a nice, strong, scary, sharp pullback. We're not going to get the chance, though, here to trap the bears in. Every once in a while, it'll V-bottom off that low and begin to grind going higher. Now, if this happens, that voice in your head is going to be telling you to chase after it. Do not chase after it. Do this instead. Mark a trend line off the highs. Bring that trend line to find a channel down off that low. Now, repeat after me. First test is the best test. I want to buy the first pullback, the first test off the low of that channel. My favorite entry is the one that goes just below that prior swing because that's where bear traps live. Another good variation of the entry on this, which you'll learn more in our free video classes, is to get below that 21 EMA, let the bears try twice to send it lower and squeeze those stops running higher. So again, hopefully we'll get a chance for a bear trap down here, but sometimes we don't. And we'll take whatever the market gives us, and I don't want to miss that first test trap, that two try failure, that pullback combination, all the same entry patterns you guys are learning inside our free video course. Now, I have two more entry patterns I want to talk about on this, but let's slow down for a second because I know a lot of you guys watching right now, you know these patterns already. You're making money with traps and add-ons already. But if you're here for the first time right now, this might be a brand new strategy. Don't you worry though. I teach this entire system, the entire roadmap. In fact, I have a ton of examples of V-bottoms like this, bear traps, add-on trades, range rotation. Guys, I want to help you time better entries, make more money with this stuff. I'll put a link up top here for you, upper right-hand corner. Hit that link that popped up there and take that free trading course because the strategy I teach in that short video course will teach you a simple trick we use in our members trade room that literally tells us exactly where to find the winning trades each morning. More importantly though, I want to teach you my 4 favorite entry setups so you can time better entries, make a lot more money. Guys, bottom line, the markets are way too good right now not to be making consistent profits. So if you're tired of missing the best entries, if you've lost your confidence in your current trading strategy, again, hit that link that popped up there. Watch that free trading course. Everyone loves all the trade examples I include in that short video series. The best part is it is 100% free for you. Oh, also too, keep in mind, guys, I'm going to put all the important links you'll need to learn the strategy, join our trade room, come learn along. I'll put all the important links in the description of the YouTube video. Start first with the free video classes. Most folks start making money all on their own, all from that free video course. So grab that link description of the video. And don't forget, we trade together every morning at the opening bell in our members trade room. I'll put that information there for you here too. And if you're on Twitter X, I post a ton of charts and videos, mindset stuff on Twitter X during the day. If you're on Twitter X, give me a follow. Again, all the details you'll need to learn more, hopefully earn a lot more, linked up for description of this YouTube video. All right. So where did we leave off? I want to take a pit stop there to show folks where they can learn all these setups, because I can't teach everything, unfortunately, in these videos. Now, I talked earlier about I want to get that scary pullback, right? Scarier the better, and trap those bears in. Now, one of my favorite trades to find the perfect pullback is what I call a double bottom retest, or a retest trade. So for example, a lot of times what happens is we'll get a nice, strong, scary pullback. I'll get my bear trap down here. I'll get a winning trade out of this, but sometimes the strength of that move going lower is so strong that it ends up running lower and taking out that low. Now, again, in my free video classes, you'll learn about how we take profit targets using volatility, a one-to-one, remove that risk. So these are winning trades in most cases. But again, we're not going to get that big run going higher. We'll roll over and take out that low. Now, at this point, all this is a strong pullback, and anytime we see a strong move going lower like that, we know the odds are decent that they're going to retest that low and then finish off that move going higher. We call these retest trades in our trade room, and they can be some of the biggest winners, the best ways to pick that perfect pullback we get each week in our trade room. The key though is we're not going to blindly buy that retest. What happens is once this thing runs lower, once we get that retest of that low, anybody who sells short up here, they're taking their profit down here, right? Sellers up here become buyers down here. You tell me, is this a good place to start selling? Of course not. We're bullish overall on the hourly time frame right now. Yeah, we know the bears are trying to fill that gap down there, but guys, I cannot risk small to earn large by selling into recent lows. There's no way I want to be a seller in that situation. But I can almost guarantee there'll be a lot of rookie traders out there who don't watch these videos. They're chasing after the market. They're relying on indicators to make decisions. They're not, right? They're not in tune with the overall direction, and I can trap them in here once again. We call this a second bite at the apple. I'm looking for bears to come in, try once, try twice. Why twice? Because again, I want their stops, right? I want their pain right here so I can buy into those stops and run back higher. Remember, these bear traps, they oftentimes lead into those add-on trades, right? So trap the bears in. As we start making our way going higher, we know that range overhead is acting as a magnet. If I start seeing that separation off the moving average, I can now go out, mark off that high, mark off that low. I want that first pullback right below that low. Again, think about a bear trap. It's a retest trade, right? A run down, they retest. We trap the bears in, squeeze those stops, and we add to our winner. One contract, two contract, a quarter size, a third of my normal size, right? Adding to it as it runs back up to retest recent highs and potentially one big pendulum swing rotation going higher there. One final variation to pick the perfect pullback. Then I'm going to talk about here in a moment here, I want to talk about if we go higher here, right? What is the game plan if we go higher? Can I sell it? Can I buy it up there? There's two types of trades to look for tomorrow morning if we keep going higher after a big move that we saw today. We'll talk about that here in a moment. One final question though. What if we don't get that scary pullback, right? I want a nice scary pullback here. The scarier, the better. What if we don't get it though? What if all we get right now is we had that strong run up, that shallow pullback, that higher high in price? We might get a shallow pullback right below that low at 95 and 90. If you're in my free trading classes right now, you know this is a technical bear trap area. It's a higher high in price with a shallow pullback in between. But how do we buy this one though? Yeah, this one's not as desirable, right? We're not allowing us now to buy nice and low. If I buy a shallow pullback, there's one type of entry pattern we look for whenever I'm buying a shallow pullback. It's always going to be a technical bear trap. Now we've talked about regular bear traps, right? Running lower, bears once, bears twice, and buying into stops. That's a very simple way to think about a bear trap pattern, right? 2 tries and trapping in those bears. If all we get is a shallow pullback though, what's my concern? My concern is I'm buying too high. I'm buying relatively high compared to the size of this big move higher we saw today. In these scenarios, whenever I'm buying relatively high, I'm going to use the same basic idea of that bear trap pattern, but with one small twist. And this is where the technical bear trap comes in handy. A technical bear trap will need to be a higher high in price and get right below that low. So if I take out maybe the 95 area, right, or that 90 area, we don't get that scary run down. I start seeing now these bears come in and try to go lower once, try to go lower twice. Again, I don't want to buy up here. I don't want to buy as it goes higher. We're already high enough already on the chart right now. I can't risk small to earn large if I buy right there. My risk is here, reward, it doesn't work that way, right? Every once in a while, I might get lucky and make money doing that. You're not gonna make money long-term buying high after a big move higher that we saw today. I need to be in this trade as low as I possibly can. And there are a lot of examples of these, by the way, inside our free trading classes. But again, higher high in price, get below that prior swing low. That is a technical bear trap pattern. You'll see a lot of examples of those inside our free trading class, which I mentioned earlier, linked up in the description of this YouTube video. So now we know the scary trades are the better. Do we get it running up? Do they retest for that retest trade and back up, right? Or do we see that V bottom and find that new channel? The game plan is ready. Here's one more important question though. What if we go higher here? What is the game plan if we go higher? Let's go grab the NASDAQ now. NASDAQ is very similar, as you can see here, to the S&P, and we'll talk about a few more scenarios here to wrap up tonight's video. Now, you can easily see right away that range here on the hourly. Ranges love to rotate. If you learn one thing from this video tonight, I hope it is, look at these ranges, right? That range right there, the amount above, the amount below, right? Notice how ranges, they love to rotate with symmetry, above, below, below, above. Now, knowing that, look at the amount below. Look at the amount above, right? What do you see? They've broken that symmetry now. That is why I said earlier, at least for now, we still have that deadline next week for the tariffs on April 2nd. April 2nd is the reciprocal tariff deadline. That's next Wednesday. So for right now, we're very bullish right now on the hourly chart, and that will be used as a directional filter. Now, let's dive down to our tick charts. Before we do that though, if you're enjoying this video tonight, please help me grow this channel by hitting that like button and make sure you subscribe so you see all of our videos in the future. I know we're all busy people these days, and I appreciate you coming out and watching my videos here tonight. So thank you so much for the likes, subscribes, all the ongoing support. Now let's roll our sleeves up here and talk about entries here on the NASDAQ. Over on the NASDAQ right now, very similar we saw earlier on the S&P. I have a big move going higher. We know that buyers are not going to want to buy high. They're going to want to buy low. And to buy low, we're going to use things like that gap, of course, is an obvious key support level down there at 970 and 3/4. I've got this pop-up grind going higher. That pop and grind channel looks beautiful, right, to buy that pullback. And remember, we talk about pullbacks. Pullbacks, they sound so easy until they happen. So it's very important that we look for a scary pullback, right? The scarier, the better. The scarier this thing pulls back, usually the more we're going to get those bears convinced. The reason why you want this to be a scary pullback is because what that does is it convinces inexperienced traders to chase after it and start selling on the pullback. That allows experienced traders like us to trap those bears in and squeeze those stops running higher. So I want that scary pullback, like I mentioned earlier, on the S&P. In fact, pretty much everything we talked about earlier on the S&P can be applied here now to the NASDAQ. Let's talk about going higher here, because again, I'm not going to go back over the entire gameplay we mentioned earlier on the S&P. All of the setups on the S&P can be applied here now to the NASDAQ. What if we go higher though? There's two things I want you to think about as we go higher. First of all, we oftentimes will see after a big move up like this, we do oftentimes see an attempt for a breakout that fails and runs back down. Would anybody be surprised if after a big move up like this, we tried to go higher overnight, but we simply run out of bullets up there? Eventually, buyers will run out of ammunition to buy up here. And if that happens, remember, this will feel very bearish, but it's not a bear market yet, right? Because measure the amount above, measure the amount below. That's going to give us now the area to look for. You guessed it, a bear trap. Wait for that moving average to come back in. I'm not a big fan of picking tops and bottoms. I'm not going to blindly buy into that area. I would much rather wait for it to pull back, let the bears try twice, get that bear trap pattern, and then again, as it rotates higher, remember symmetry. Remember the amount below the range, the amount above the range. This is why we love ranges so much in our trade room, and why I talk about them so much in our free video classes is because think about it, right? Now we know exactly where the market wants to go. Now what we do now is just add to our winner. As we go higher, look for that separation away from the moving average. Look over here, right? That little pullback right there. Look how the pullbacks, they barely miss the moving average. Remember, separation off the moving average equals strength. Separation equals strength. So as we go higher here, higher high in price, separate off the moving average. And again, I want to add to that winner, 1 contract, 2 contracts, a third of the total position, a quarter of the position, whatever you want. Just don't kick your feet up on the desk and relax, right? Because ranges, they love to rotate. And so one of my favorite trades for tomorrow would be, I would love to get a fake out breakout off the high, use the amount that we go above the high, project that down below that low. That tells us now bear trap, add on, and of course, as always, using the symmetry below, back above, and that gives now that target up overhead. Ranges are one of my favorite situations because they give us these pendulum swings. We can use symmetry back and forth like this. Now, maybe I'm wrong, right? Maybe I'm wrong. Maybe more tariff headlines come out overnight. The markets are there. They are obsessed with more headlines about tariffs. So we may see something happens here overnight. What if we saw another big breakout going higher here? Well, first of all, how would I trade something like this? Well, 2 ways. First, if it breaks out going higher and I start seeing separation off that moving average, I can look for that same add-on trade. Now, in these cases, I always go pretty small on these, right? Because, of course, you're buying relatively high on this, right? So 1 contract, 2 contract, half size, quarter size of what the full size position would be. So if we keep going higher here overnight, and we get that, again, we get that separation, we get that higher high in price, small position, right? A little tiny position just to get something going here, get some skin in the game, going higher. Now, very important, make sure you pay attention right now. The size of that first leg can be used as a measuring leg. This is another reason why I love ranges, because breakouts are very easy to trade. For example, I can take the amount of the breakout leg, project that going higher, and that now tells me now where that final target should be. No more guessing about how far to let that trade run. So again, if we go higher here and we start seeing some separation, and I can get into, again, small position on the add-on entry I mentioned earlier, that will give me a way now to participate before we take out that measured move. Now, once I get that measured move, we now stop buying and we wait for what is ultimately a breakout pullback. We look for what are prior highs, prior levels of resistance can now be used for a breakout pullback. When I say breakout pullback, think about a 2-legged pullback. I always say a measured move that goes a bit too far, right? Think about more than a measured move there. A 2-legged pullback, that is where most of the breakout pullbacks come from. Get around the high of that trading range and then use that same bear trap into add-on combination. Bears try once, bears try twice. I'm not picking bottoms. I'm not going to blindly buy down there. I like the idea of buying right there, but I want to get those bears trapped in so I can use their stops to fuel that move back up where? Back up to retest that high. And of course, as always, as it makes that run higher, add to your winner, look for that same pattern. Basically, that pattern right there is right over here now. Separation, higher high, get that first pull back below it, and you're off to the races going back higher. So again, be aware of that fake out breakout, amount above, amount below. That might be my favorite trade for tomorrow. If we do keep going higher though, small size, as we separate, think about that measured move for your target. 2-legged pullback, bear trap, add on, final target, back at that high. Guys, that's the plan for tomorrow. Now, speaking of tomorrow, the place to be is in my trade room every morning, 8 o'clock Eastern time. Guys, the easiest way to start making money in these markets is to come out every morning, learn and trade along every day at the opening bell. I'm going to put all the important links you'll need to get started, learn the system, join our trade room. I'll put all the important links in the description of the YouTube video. Start first with that free video class. Enjoy all those trade examples. Then come join me 8 o'clock Eastern time in the trade room and we'll do it all together. In the meantime, guys, be well out there. Be nice to each other, will ya? And you better be here next time. Adios, amigos. Bye for now.